Hey guys, this is the Investment Venturer, and welcome to the Investor Next Door podcast. Today we'll be discussing companies' earnings and earnings reports. I should let you guys know that anything said on this podcast should be used for information and entertainment purposes only. This is not investment advice, and I do not recommend diving into any project or trying any strategy without doing your own research first. This week, many large-cap, reputable companies have released their earnings reports. In this episode, we'll dive into what are earnings reports and a summary of a few of these companies' earnings this week, starting on April 28th and ending on May 2nd, 2025. Firstly, let's discuss what earnings reports are and why companies report them. An earnings report, also known as an earnings release or quarterly report, is a formal document that publicly traded companies release every quarter to inform shareholders, analysts, and the public about their financial performance over the past 3 months. What's in an earnings report? It typically includes revenue, sales, net income, profit or loss, earnings per share, EPS, operating expenses, guidance for future performance, commentary from executives, for example, the CEO or CFO. Why do companies report them? Legal requirement. Public companies are required by regulators, like the SEC in the U.S., to report financials regularly to ensure transparency. Investor communication. It helps investors evaluate the company's financial health and make decisions about buying, holding, or selling stocks. Market reaction. The report often causes stock price movements depending on whether results meet, beat, or miss market expectations. Accountability. It forces management to stay accountable for financial performance and strategic decisions. This week, a few companies we know have released their earnings reports, so let's do a brief summary of each. Let's start with Coca-Cola, traded on the New York Stock Exchange, NYSE, using the ticker symbol KO. Coke reported its Q1 2025 earnings on April 29, 2025, delivering a mixed performance that exceeded earnings expectations but fell short on revenue. Earnings per share, EPS, 73 cents, surpassing the consensus estimate of 72 cents. Revenue, $11.1 billion, a 2% decline year over year and below the anticipated $11.22 billion. Net income, $3.3 billion, up 5% from the previous year. Adjusted revenue, $11.2 billion, slightly above Wall Street forecasts. Operational performance. Global unit case volume increased by 2%, driven by strong demand in China, India, and Brazil. North America, volumes declined by 3%, though an 8% price hike and premium product sales helped offset the downturn. Coca-Cola Zero Sugar experienced a 14% growth in volume. Challenges and outlook. Tariff impact. The company acknowledged the effects of tariffs on aluminum and other materials but deemed them manageable, considering alternative packaging methods like increased use of plastic or glass bottles. Geopolitical concerns. A viral video temporarily affected U.S. sales among Hispanic consumers, prompting targeted promotions to restore trust. Full-year guidance. Coca-Cola slightly lowered its 2025 earnings growth forecast to 7 to 9% from the previous 8 to 10%, citing ongoing geopolitical and economic uncertainties. Despite these challenges, Coca-Cola's diversified global presence and strategic pricing initiatives have positioned it to navigate the current economic landscape effectively. Moving on, let's talk about Visa. Visa Inc. is a global financial technology company that facilitates electronic payments between consumers, merchants, banks, and governments. It does not issue credit cards or extend credit. Instead, it provides the infrastructure and network that allows payments to happen securely and efficiently. Visa Inc. traded on the New York Stock Exchange under the ticker symbol V reported its fiscal second quarter 2025 earnings on April 29, 2025, delivering strong results that surpassed Wall Street expectations. Adjusted earnings per share, EPS, $2.76, exceeding the consensus estimate of $2.68. Revenue, $9.59 billion, a 9% increase year over year, surpassing the anticipated $9.34 billion. Net income, $5.44 billion, up from $5.11 billion in the same period last year. Key business metrics: payments volume increased by 8%, with 6% growth in the U.S. and 9% internationally. Cross-border volume rose by 13%, indicating a strong post-pandemic recovery. Processed transactions grew by 9%. Outlook and strategic initiatives. Annual revenue growth forecast. Visa raised its projection to low double digits, up from high single digits. Share repurchase program announced a $30 billion multi-year buyback plan, with $4.7 billion remaining as of March 31st. Stock performance: shares rose 1% in after-hours trading and have gained over 8% in 2025, outperforming rivals MasterCard and American Express. Visa's robust performance reflects resilient consumer spending and strategic initiatives that position the company for continued growth. Next, we discuss Microsoft. Microsoft Corporation, traded on the NASDAQ under the ticker symbol MSFT, reported its fiscal Q3 2025 earnings on April 30, 2025, delivering strong results that exceeded Wall Street expectations. Earnings per share, EPS, $3.46, surpassing the consensus estimate of $3.22. Revenue, $70.1 billion, a 13% increase year over year, exceeding expectations of $68.44 billion. Net income, $25.8 billion, up 18% from the previous year. Cloud and AI growth. Cloud and AI segment revenue, $26.8 billion, a 21% year-over-year increase driven by strong demand for Azure and AI services. Azure revenue, up 22%, reflecting robust growth in cloud services. Personal computing. Personal computing revenue, $13.4 billion, a 6% increase, despite ongoing tariff-related uncertainties affecting the Windows OEM and devices segment. Following the earnings announcement, Microsoft's stock price rose by over 6% in after-hours trading, reflecting investor confidence in the company's performance and outlook. Overall, Microsoft's Q3 2025 results underscore its leadership in cloud computing and artificial intelligence, positioning the company for continued growth amid economic uncertainties. Moving on, Meta also released their earnings last week. Meta Platforms, Inc. is a leading American technology company specializing in social media, digital advertising, and emerging technologies like artificial intelligence, AI, and virtual reality, VR. Headquartered in Menlo Park, California, Meta owns and operates several major platforms, including Facebook, Instagram, WhatsApp, Threads, and Workplace. They are traded on the NASDAQ under the ticker symbol META. Meta released Q1 2025 earnings on April 30, 2025, delivering strong financial results that exceeded Wall Street expectations. Revenue, $42.31 billion, a 16% year-over-year increase, surpassing analyst expectations of $41.38 billion. Net income, $16.64 billion, reflecting a 35% year-over-year growth. Earnings per share, EPS, $6.43, exceeding the consensus estimate of $5.24. Artificial intelligence and innovation. Meta AI. The company reported nearly 1 billion monthly active users on its AI platform. Capital expenditures. Meta raised its 2025 capital expenditure forecast to $64 to $72 billion, primarily to support AI infrastructure and data center investments. Reality Labs and regulatory challenges. Reality Labs losses. The division reported a $4.2 billion loss in Q1 2025, primarily due to investments in augmented and virtual reality technologies. Regulatory issues. Meta is appealing a €200 million fine under the EU's Digital Markets Act and faces ongoing antitrust scrutiny in the US. Meta's robust performance underscores its strategic focus on artificial intelligence and innovation, positioning the company for continued growth despite regulatory and market challenges. Next company we'll discuss is Amazon, traded on the NASDAQ under the ticker symbol AMZN. Amazon's Q1 2025 earnings call, held this week, highlighted strong financial results but tempered investor optimism due to cautious forward guidance. Financial highlights. Revenue, $155.7 billion, up 9% year-over-year, surpassing analyst expectations. Net income, $17.1 billion, $1.59 per share, significantly higher than $10.4 billion, $0.98 per share, in Q1 2024. Operating income, $21.2 billion, a 61% increase from the previous year. AWS revenue, $29.27 billion, growing 17% year-over-year but slightly below forecasts. Advertising revenue, $17.3 billion, up 18% year-over-year. Q2 2025 outlook. Revenue guidance, $159 billion to $164 billion, aligning with Wall Street expectations at the midpoint. Operating income forecast, $13 billion to $17.5 billion, below analyst estimates. Factors influencing outlook: uncertainty around consumer demand and potential impacts from President Trump's shifting tariff policies. Strategic initiatives: AI investments. AWS's managed AI service, Bedrock, has tens of thousands of customers, including Adidas, New York Stock Exchange, Pfizer, and Toyota. Capital expenditures. Amazon plans to spend approximately $104 billion in 2025, focusing on scaling AWS, AI development, and logistics optimization. Operational efficiency. Amazon reduced its cost to serve on a per-unit basis globally, improving profitability. Market reaction. Following the earnings release, Amazon shares dropped around 3% in after-hours trading and were down 13% year-to-date. Analysts expressed concerns about the broader economic impact of tariffs and whether Amazon can sustain its performance amid global trade tensions. Stocks go up or down after earnings reports because investors react not just to what a company reports, but how those results compare to expectations and what the company says about the future. In this case, Amazon in Q1 2025 beat earnings expectations, but its stock fell because investors were worried about future headwinds like tariffs. The Q2 operating income guidance was lower than expected. Finally, we'll discuss Apple, traded on the NASDAQ under the ticker symbol AAPL. Apple's Q2 2025 earnings report, released this week, showcased strong financial performance but also highlighted challenges that impacted investor sentiment. Financial highlights. Revenue, $95.4 billion, a 5% year-over-year increase, surpassing analyst expectations. Net income, $24.8 billion, or $1.65 per share, exceeding forecasts. iPhone sales, $46.84 billion, up 2% year-over-year. Mac sales, $8.99 billion, a 7% increase. iPad sales, $8.09 billion, a 15% rise. Services revenue, $26.65 billion, a 12% growth, slightly below projections. Strategic shifts and tariff impact. In response to U.S. trade policies, Apple announced that most of its devices shipped to the U.S. in the June quarter will originate from India and Vietnam, aiming to mitigate tariff impacts. CEO Tim Cook estimated a $900 million cost in the June quarter due to existing tariffs. This strategic shift is part of Apple's broader plan to diversify its supply chain and reduce dependence on China. Artificial intelligence developments and legal challenges. Apple is investing in AI advancements, particularly through its Siri enhancements and the integration of Apple Intelligence. However, the rollout has faced delays, and the company is reportedly lagging behind competitors like OpenAI and Google. Additionally, Apple is entangled in a legal battle with Epic Games, facing criticism from a judge and potential criminal contempt investigation. Market reaction. Despite the strong earnings, Apple's stock fell approximately 4% in after-hours trading. Analysts expressed concerns about the potential $900 million quarterly cost impact of ongoing tariffs and the company's AI development challenges. The stock has declined 15% year-to-date through Thursday's close. In conclusion of last week's earnings reports, we can see that despite strong earnings from several companies, the broader market experienced volatility due to concerns over trade policies and economic uncertainties. The S&P 500 and Dow Jones Industrial Average saw gains, while the Nasdaq Composite remained relatively flat. Investors are closely monitoring the ongoing impact of tariffs and global trade tensions on corporate profitability. Thank you guys for listening to my podcast. Be sure to subscribe to the Investor Next Door podcast on your favorite podcast listener. If you're watching on YouTube, be sure to like and subscribe for future episodes. Follow me on social media to stay updated. Twitter X, @InvestNDPod. Instagram, @InvestNDPod. Share this episode with your friends if you've learned something valuable from this podcast, and I'll see you guys next time.